Hi friends, this is Sajif here. Welcome to my channel. So to answer the question whether the stock market is a bubble or not, we will first try to understand what a stock market is. So by definition, the stock market is a place where shares of publicly listed companies can be bought and sold. So we'll explain this by an example. So just assume that there is a person named Rahul and he makes very tasty chocolates. All over his town, his chocolates are in high demand. But because of his limited infrastructure, he is not able to meet the demands. So he will approach the banks or the angel investors and will try to raise the capital to build small factories. Now assume that he built two factories in his town and his chocolates are getting sold like hotcakes. Also, he is getting a lot of requests from the nearby towns for the chocolates. So to increase the production of the chocolates, he has to build more factories which need more capital. For this reason, he decides to make his company go public. He submits the request to SEBI, which is Securities and Exchange Board of India. SEBI will check the documents, all the legalities, valuations, and if everything is fine, SEBI will approve Rahul's filings. The process of listing the company for the first time in the share market is called as IPO, which stands for Initial Public Offering. The initial listing will be done in the primary markets. So just assume Rahul lists around 1 lakh shares in the IPO market and all the 1 lakh shares were subscribed. Rahul is very happy and he gets the money and starts expanding his business. The company shares trading in the share market after a few days will get listed in the secondary market. After this, the prices of the shares are mostly dependent on the buyers and the sellers. So in 6 months' time, Rahul opens one more factory and is working on operating under 4 more factories in different places. So after 1 year, Rahul got good profits from his company and he releases the annual report of the company to the public. In the report, Rahul mentions about the profit and loss statement, the balance sheet, the cash reserves, and also his future plans, where he plans to set up 4 more factories and plans to expand his business by producing different varieties of chocolates, etc. So the shareholders find this company very promising and they buy more shares of the company, and hence the demands for the shares increases and thus the prices of the shares also increases. This is in the assumption that the economic and the political conditions support the market. So this is just a simple scenario which explains how the prices of the shares move in the stock market. So here what I want to highlight is buy shares of a company only after studying about the company. So the best way to analyze a company is by reading its annual reports. If you find annual reports a bit complicated, there are other tools like Screener.in, TickerTape or Money Control, where these sites will consolidate the annual reports and share the main points in their sites. Always check the P&L statements, the balance sheet, the cash flows, etc. before buying a stock. So in this way, we will make a better holding capacity of the stocks. If we analyze and learn about the companies then do the investments, then we will understand that the stock market is not a bubble, but it is a place where we common people have the opportunity to be a part of India's top companies by becoming a shareholder of these companies. So to understand the perspective, we will compare two people named Ram and Shyam. So in the year 2019, both of them had a savings of around 10 lakhs rupees each. So Shyam decided to buy a Tata Nexon top-end variant for the 10 lakhs he had, and Ram decided to invest his 10 lakhs in Tata Motors shares. So in 2019 Jan, the Tata Motors shares was about 200 rupees. So assume he got around 5,000 shares and he kept the shares till 2023 Jan. So in 2023 Jan, after 3 years, Shyam will be having his 3-year-old Nexon, which is worth an amount of around 6 lakhs. For insurance, petrol and services, he would have paid around 2 lakhs for 3 years. So Shyam's 10 lakh might have become 6 lakhs minus 2 lakhs, which is 4 lakhs approximately. Now we will check Ram's case. So currently Tata Motors shares are around 410 rupees. That means his 10 lakhs would have become 20 lakhs, which is more than 100% returns. And Ram can still buy some Tata Nexon if he wants with his profits alone. So my point is, if we invest wisely, we will be getting benefit from the stock market. But before concluding, I want to share with you the following points also regarding the stock market. Point number 1, it's better if you don't buy stocks by taking any kind of loans. Point number 2, never buy stocks using your emergency funds, as we don't know when the stocks can go up and down. Point number 3, long-term stocks in good companies tend to outperform their investments, basically like the real estate, gold, etc. But in the short term, this might not be true. Point number 4, only invest in companies where you have a good conviction to invest for the long term. Not all companies in the stock market qualify for this criteria. So friends, this video is just for educational purpose. The stocks mentioned here are not recommendations. So that's it friends. Hope you got some value from this video. If you like these kind of videos, kindly consider to like, subscribe and share. Thank you for watching. See you.